Remember, I'm going to give you 3 ways to make it tax-free forever. So, idea number 1 takes this consolidation and diversification idea and translates it into retirement. The best example I can give you for retirement is going to come from a family farm. Or it could be a portfolio of residential investment properties. Whatever it is, as you get closer to the end. With the family farm, what you actually have is 2 separate pieces of property, don't you? You have your primary residence, and you got a bunch of farmland. Well, the primary residence, when you sell, is going to be tax-free, right? The other section of that, the farmland, would be eligible for 1031 exchanges. So, Grandma and Grandpa sell the farm. The first thing they do is take a section of that as their primary residence. That's tax-free. What are they going to do with that? Whatever they want. Maybe it's time for the cruise to Alaska. Whatever. The other section they're going to do a 1031 exchange on. Now, in our example here, they had 3 children. A son in San Diego, a daughter in Fort Collins, Colorado, and a daughter in Pueblo, Colorado. They went to their children and they said, here's the deal, guys. We have to make money because we've been farmers all our lives. But we want you to get this property after we're gone. So we need to make the money on it now while we own it. But would you help us pick out property you would like to inherit? The son in San Diego picked out an office building for his insurance business. The daughter in Fort Collins, Colorado, picked out some duplexes for student housing. The daughter in Pueblo, Colorado, picked out some single-family rentals. The agreement was the children would manage those properties till Mom, Pa, Grandma, and Grandpa passed away. So by doing that, let's go back now. The primary residence portion was tax-free, right? Did they pay any tax on the property that they sold in the 1031? Nope. But they turned it from farmland, which they had to work pretty hard on, to passive investments managed by others. Still haven't paid a penny in tax. And those managers are pretty motivated, aren't they? Because they know that they're going to get the property eventually. So, Grandma and Grandpa are generating more income probably than they ever did farming. They got some money tax-free. They still haven't paid a penny in real estate tax. And do you know what Grandma calls the greatest tax benefit of all? Every trip to go visit the grandkids is a business expense. What a beautiful thing that is. So, opportunity number 1 to never pay a penny in tax. Use diversification and consolidation to put it into passively managed properties that you don't have to do anything with except go to the mailbox to collect a check every month. And by the way, in today's age of internet banking, you can even eliminate that step.